Peter Eliades with you, Stock Market Cycles Update. Today is Thursday, November 21st. Most of you probably aren't old enough to remember the old movie cliffhangers where they'd show a serial like Flash Gordon or something where right at the end of this serial, there'd be a series of them, one every week, they'd leave you with a cliffhanger, which just means that, wow, how they're going to get out of this situation. This is critical. This is crucial. And you'd have to wait until the next week when you went back to see the next part of the serial, and they'd resolve that problem and go on to the next one. And the next one would end with another cliffhanger. Well, the last 2 days, especially today, have been cliffhangers. Why? Because of the sign of the bear parameters. We need to have a daily advanced decline ratio above 0.65 and below 1.95 for at least 18 consecutive days. Well, we had 13 going into today, and by the close today, we went well below that and then started rallying and got up above it to about 0.72, 73, 74. And right at the close, 1 p.m. Eastern Time, 1 p.m. Pacific Time, 4 p.m. Eastern Time, the official numbers that I look at, which come from the Wall Street Journal, those are my advanced decline numbers, all of a sudden quickly shifted to below 0.65 at a reading of like 0.643. How important was that? I don't know, but I did not want it to break the 0.65 parameter, and it appeared to have done that. Except that about 5 or 10 minutes later, they did an update, and indeed, we closed above. In fact, the final advanced decline ratio, according to the Wall Street Journal, was 0.67. So today was the 14th consecutive churning day, defined by a day where the AD ratio at the end of the day on the New York Stock Exchange is below 1.95 but above 0.65. 14 days in a row. How rare is that? Well, since July of 2001, over 18 years ago, there has only been one other stretch of 14 consecutive days of the churning pattern, and that one went on to go to 18 days, and it led to the October 2017 sign of the bear. So, okay, Eliades, what's the big deal with the sign of the bear? Show us some kind of prior history. Well, I showed you some the other day, but I'm going to try and put it in perspective for you now to show you how potentially very important these statistics are. This goes back to, it's a monthly chart, monthly closing prices in the Dow, going back to 1920. We do history, folks. We don't go back 10 years. So this is March of 20, right at the beginning of your chart, January of 20, okay? So this was an incredible rally that lasted from August of 21 all the way up to September of 29. We have the data for advances declines beginning about here, so we can't tell you what happened back here. We don't know if there was a sign of the bear, but we do know that there was no sign of the bear from around this level in 25, 26 up to the final high, except for right here in the month of July, just 2 months before the final top in 1929. Okay, so we're going to show you all of them today. We're going to spend a little time because it's a logical question. Why are you getting excited? What's the sign of the bear all about? What kind of track record does it have? You're looking at it now. Okay, from 1929, let's go out and take a look where this whole thing leads. Now we've got a better perspective, okay? So from 1929, which happened right back here to the left of the chart, and my ugly little picture's down here blocking off what happened, but I showed you that. We reached a low in 1932 and then started a rally. Did we get any signs of the bear in this rally that started in 1932, 1942, 1952, 1962? Well, in fact, we did. The first one we got again occurred in December of 1961. How far after this signal was that? Well, you count it, 39, 49, 59. You're talking about over 30 years later. And there wasn't any reason to give a sign of the bear because look at this rally. Now the market did this consolidation, and at almost every single top in that consolidation, you had a sign of the bear signal. I'll zoom in on this so you can see because some of them were multiple signals, okay? There were 2 or 3 signals here. Zoom. Big decline. There was a signal here. Well, I should give you dates. This is late 61, early 62. The next one came. I'm just giving you months now, and I'm not pinpointing the dates. February of 66. Well, that was a pretty good one. February of 66 actually marked a high point with a Dow around 1,000 that lasted for the next 16 years. And when we get up to that level again, we got 3 signals from the sign of the bear. October and December, and right after the top in February of 69 and before the big decline. Then finally, in this time zone, we got one in August of 72. That was somewhat premature, but look what happened afterwards. And in December of 72, just a few weeks before the January of 73 top. And then you can see what happened after that. So now let's go out again. Then again, you had the same type of time zone from here. Look at the parallels here. From the 32 low up into the 60s, not one signal from the sign of the bear. From the 1973 high all the way up into the 90s, not one signal from the sign of the bear. Where did you get the first one? You actually got it in April of 98. And you may look at this chart and say, you call that a good signal? Well, we'll come back to it in a second. The one after that came in September of 2000, and the one after that came in November of 17. Now, we're going to do something special to show you these last 3 signals, because if you look at them on paper, the only one that looks like it may have been half successful was the one that came in September of 2000, okay? And even then, we know the Dow topped in January of 2000, and the S&P and the NASDAQ topped in March of 2000. But pretty good signal nonetheless. What about the April of 98 and the October of 2017 signals? Let's go into those, and the way I'm going to go into them is I'm going to show you the daily advanced decline line of the New York Stock Exchange, which is a pretty close parallel to what happens to the average share of stock. So this is April of 98, okay? And I'm also going to show you there were, in this whole sequence of events from the 1920s into the present time, you say, you mean those? Are you serious? Those are the only signals? There were no false or bad signals? There were, in fact, 2 signals that occurred 6 or 8 months apart. One of them came in October of 1993. The other one came in June of 1994. I'm going to show you those signals on the advanced decline line of the New York Stock Exchange because I think you're going to be very impressed with them. So let's take a look at the advanced decline line and take a look at those signals. Okay, these are the bad signals, what you might call the bad signals if you looked at a chart. There was a signal, a sign of the bear signal. If you looked at the Dow or the S&P, you'd say, well, that was a crappy signal. We can go, that was in the middle of a great bull market in the complete 90s. Well, take a look at this chart. This is where one was given on October 19th of 1993. If we look at the Dow and the S&P, I'll call this a failed signal because it wasn't very impressive. But look at the AD line. What happened to the average share of stock? You had a little decline, a bump back up again into February of 94, and then this decline in the AD line, a substantial decline. And so this is where the signal took place in October of 93. When did we get above that level again? All the way over here, folks. That's January of 96, almost 2.5 years later. So this on the AD line was indeed You could call it an important top. And this was the other failed signal right here, June of 94. Well, call it a failed signal if you will, but look what happened after it. Immediately down, up to test it again, then down again. A pretty sharp decline into the bottom of the AD line in December of 94. Okay? How long did that one last? Well, the signal was given in June of 94, and you had to go into June of 95 before you surpassed where the signal was given. So it marked the top for the next year. So those are the two bad signals, the only ones that I would not call a complete success. You ask, well, what about the 1998 one? That one didn't look so great either. Well, let me go forward in this chart and show you something that you might find interesting, okay? This chart is not cooperating with me, but it's going to. All right, so look at these time zones. This goes back to a low on the AD line in December of 94, and this comes into a low that was registered, in late 2000. So on this whole chart, look at the whole chart of the daily advanced decline line of the New York Stock Exchange, and you look at it, and I would ask you, where on this chart would you consider the ideal, the perfect signal to have been given? Well, I mean, it's pretty obvious, right? Right in here somewhere. Well, guess where the sign of the bear signal came? It came on April 8th. Let me be sure. Let me check that. April 8th of 1998. Where is that? Well, there's the 1st, 6th, 7th, right here. This is where the sign of the bear signal came in 1998. So it didn't look impressive on the Dow chart, and it won't look impressive in the S&P chart. But let me ask you a question. Does it look impressive here? This is the daily advanced decline line of the New York Stock Exchange. What a spectacular signal this was. Look at this. This is April of 98. Down, 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 precipitous down, 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 precipitous down into November of 2000. So over 2.5 years of decline from that spectacular signal given on April 8th of 98. So let's go into the next signal. The next signal was given on September 18th of 2000. And let's take a look at that on the New York Composite Index. Okay? This is, we want to go back further than that. So on the New York Composite Index, let's go back to the signal in September of 2000. That's all the way back here. Now, they don't have a bar chart there, so let me give you a line so it'll be a little bit clearer in terms of what happened. Okay, this, I believe, let's check the date. September 19th, it actually came on the 18th. So September 18th of 2000 was the next sign of the bear signal. This is the New York Stock Exchange, folks. This is where all the stocks that trade on the New York Stock Exchange are measured. This is where the sign of the bear signal came. September 18th of 2000. What happened after that? Well, you tell me. When did we get back up to that level again? Well, let's go over here and look. About 4.5 years later. Spectacular signal. Okay? Now, until the last year or two, I want you to know that from here in September of 2000, there was not one signal, the sign of the bear, in 2000, going forward from that 2000 signal, 01, 02, 03, 04, 05, 06, 07, 08, 09, 10, 11, 12, 13, 14, 15, 16. This is the first signal that was given in 17 years. And again, if you look at this signal on the S&P and the Dow, you'll say, well, that was a crappy signal. We went way up after that, and we've kept going up to new highs ever since then. But look at the New York Composite Index. This is what happened there. The signal was given on this date right here. And it was almost like 1929. The signal in 29, right after the signal was given, you went up another 9, 10, 11% to this high. We've drawn a red line across where that high occurred, January 26th of 2018. What happened after that? Well, look and see what happened from that high to the low that was registered in December of 2018. The New York Composite was down 21.3%. End of case. From the high to the low, the kind of decline, minimum kind of decline you'd expect from a sign of the bear, around 20%, in some cases much more than that, but a minimum decline of around 20%. Now, granted, in order to be fair, you really shouldn't measure the decline from the ultimate high, but from the point the signal was given, and the signal was given here. So it was not as impressive a decline from where the signal was given until the low in December of last year was nonetheless around a 13% decline. Still a pretty good decline in light of what the market's done over the past few years. That takes us to today. So if you want to know why I'm so excited about the potential for a sign of the bear signal, I've shown you the results. I showed you the two failures that turned out not to be great failures after all, if you look at the advanced decline line. So where do we stand now? Well, we finished the 14th day. Now, if tomorrow on Friday we have an advanced decline ratio above 195 or below 0.65, this whole thing is down the drain. You've got to start from beginning again, and you see how rare it is to get 14 days. So the whole theory of the sign of the bear is out the window, at least for the next couple of months anyway. But does that mean that the market's not in trouble or it's not walking on thin ice? No. You don't have to have a sign of the bear for a very important market top, and you saw that in 2007. But if you do have the sign of the bear, you've got very strong evidence of what's happening in the market. And that's what we're looking for. That's why the potential for it is so exciting. So the next couple of weeks are very important. All we need now is 4 more days: Friday, Monday, Tuesday, Wednesday, of above 0.65, below 195, and we have the setup for the sign of the bear. There are other conditions to it. I led you to the special reports I did online that you can read about what the other conditions are. I'm not going to give them to you now. I don't want to take up all that time. What I do want to show you at the very end here is the very reason for these updates, and that is the projections. So this is the projection that we have outstanding now. This is an hourly chart. And on that hourly chart, this is a 3.5 to 4, the equivalent of a 3.5 to 4 day offset, which is a nominal 10-day projection. This is the S&P cash, and as you can see, we've broken below both of the offset lines, and when we broke below the second, we confirmed a projection down to here. That calls for a move down to at least 3084.59 and as low as 3076.52. So only two things can happen in relation to this projection. Either it is met, and if it is met, we look to see if we get even lower projections, or it could be invalidated. You will have to get above both these projection lines. Now, there are 6 of these bars in a market day. 2, 3, 4, 5, 6 was today, so tomorrow we'll have 1, 2, 3, 4, 5, 6 to close out the week. It'll come up to here. If you're going to invalidate this projection, you need to get up into this area around 31.27. Well, look what the old high was. In other words, you need to get up to around a new high in order to invalidate. In order to meet it, you just have to come down to at least the 3084.59 level. Now, the scary part about this whole thing is if we do go down there, 38, you're talking about another 20 points. It would almost seem, not for sure, but a pretty confident thing if we went down that low, that the advanced decline line, the ratio, would go below 0.65. But we're only interested in what it looks like at the end of the day. So maybe we open very weakly tomorrow, meet this projection, and start up again from there. I don't know. That's not a prediction. I'm just showing you what the projection charts show us, that this is now the target for us down at these levels. Are we going to get there? I don't know, about 60, at least around 65 to as high as 80% of projections are met. So are we going to meet this projection? We should find out very quickly. Either going to meet the projection or invalidate it by getting above these lines. I hope this whole thing has been helpful to you. It's really exciting. These are cliffhangers. I hope some of you have gotten caught up into it and have been doing your dividing advances by declines all day long. There are some programs that'll do that for you, but it's been so exciting to watch. It really, today was really a cliffhanger to see if we got the 14th day. Indeed, we got it. 14 down, at least 4 more to go to get the setup for the sign of the bear. Thank you very much for watching. Subscribe, please. Bottom right, click subscribe. Click again to get notifications. Click the bell. Give us some comments below. Tell us if you like these updates. Give us a thumbs up below. Thank you very much. Thanks for watching. We'll talk to you tomorrow.